You've no doubt heard by now that as of Monday, August 31st, 2020, Apple stock will reflect a 4-for-1 stock split. But what does that mean? Why do companies split their stocks? Will it impact the company's value or my investment in their stock? And should I be concerned if I see Apple stock trading at a lower value? A stock split happens when a company approves the issuance of additional shares to current shareholders. This is not the same as a company listing additional shares for sale, as the newly issued shares will go to existing shareholders who can then choose to keep them or sell them on the stock market. Although the number of outstanding shares increases and the price per share decreases, the value of the company is not directly affected by the split. Apple will be initiating a 4-for-1 stock split. This means that everyone who owns stock in Apple as of August 24th, 2020, will be issued 3 additional stocks for each stock they already own. As a result, when added together, all 4 new stocks will equal the value of a single stock prior to the split. For example, let's say you owned 1 Apple stock valued at $100 prior to the split. You will now own 4 stocks valued at $25 each after the split. As you can see, your total investment amount did not change, even though the total amount of shares you own did. So, why split a stock? Marketability is one of the reasons companies decide to initiate a stock split. Prior to the split at the close of business on Friday, August 28, 2020, Apple was trading at $499.23 per share. On Monday morning, it's expected that Apple will be trading around $124.81. By reducing the cost of each stock, companies are able to increase access to a broader range of investors. If Apple had not split its stock since they went public in December of 1980, a single Apple stock would cost approximately $28,000 per share. Clearly, this would limit who could afford to purchase and trade Apple stock. Liquidity is another reason companies engage in stock splits. By making it more affordable to investors, the company increases liquidity, which allows a higher volume of trading as there are more investors who are able to buy and invest in the stock. Increasing affordability could help to increase demand, which may encourage a higher stock price in the long run. Another reason a company may consider when evaluating a stock split is the message it sends to investors. When investors see a stock split, it's often a sign that a company is doing well and may reinforce their belief that the company is poised to continue its growth well into the future. So, how many times has Apple split its stock? Excluding the current split, Apple has initiated 4 prior stock splits. 3 2-for-1 splits that occurred on June 16, 1987, June 21, 2000, and February 28, 2005, and a 7-for-1 split that occurred on June 9 of 2014. Add that to the current 4-for-1 split for a grand total of 5 stock splits. As we mentioned before, if Apple had not ever split their stock, the estimated value of a single Apple stock would be approximately $28,000 today. As you can see, stock splitting is nothing to be afraid of, as it's an important mechanism to help maintain the marketability and liquidity of the underlying company's stock. Without splitting, stocks could easily be priced out of the general public's reach and stifle the ability to provide a robust and efficient market. If you enjoyed this video, don't forget to like, subscribe, and comment. We'd love to hear other topics you'd like to see covered. As always, thanks for watching.